Good morning and welcome to the Amaero Ltd Investor Webinar. I'm Jane Morgan, Investor and Media Relations Manager, and today I am joined by our Chairman and CEO, Hank Holland. Hank will be providing a company update followed by a Q&A session. So to ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. Hank, I'll hand to you.
Thank you, Jane, and good morning, everyone. As announced on Monday, Amaero is pleased to provide a number of operational and commercial updates. The company has completed commissioning of its second EIGA Premium. The EIGA Premium is the most advanced atomization technology. The technology produces a higher yield of the most valuable powder used for laser powder bed fusion, and it reduces argon gas consumption by 50%. The company has reaffirmed its prior guidance that revenue growth is accelerating in the current quarter, and that revenue is expected to significantly scale in FY26. Amaero reaffirms its guidance and is pleased to share that with contracted sales from long-term agreements and from received purchase orders, including an order for 27 metric tons of titanium spherical powder, the company has visibility to approximately 80% of its planned revenue for Q1 and Q2 of FY26. The company announced that the Australian $28 million improvements to Amaero's flagship 9,200 square meter manufacturing facility in Tennessee will be substantially completed on schedule by the end of June. The third EIGA Premium Atomizer that was ordered in December 24 is on schedule to be delivered in March of 26 and to be commissioned by June of 26. 3 years ago, Pegasus and I led an investment in Amaero and reset the company's strategic direction. We relocated the business from Melbourne to Tennessee in July 2023. We attracted a leading technical team with pioneering experience in atomization of refractory and titanium alloy powders and in PMIP manufacturing of large near-net shaped parts. We committed to an ambitious capital investment plan that included the commissioning of the most advanced atomization technology. We embarked on a series of strategic capital raises that totaled Australian $98.5 million over 3 years. I led the first 3 capital raises, and the last 3 capital raises were led by 4 premier Australian institutional investors. I'm unaware of another ASX company of Amaero's size that has such strong institutional support. We secured Australian $35 million equipment financing with favorable terms from Export-Import Bank of the United States. Amaero's financing was the 6th loan approved for the Make More in America initiative, and Amaero was the first ASX-listed company to secure financing from the EXIM Bank program. The culminating result, Amaero has commissioned the largest capacity and the lowest cost U.S. domestic production of high-value refractory and titanium spherical powders. We are pleased to host an event at Amaero's facility on June 2nd with U.S. Congressman Chuck Fleischmann. As a 9-term member of the U.S. House of Representatives, Congressman Fleischmann serves on the Appropriations Committee and chairs the Energy Subcommittee. As we recorded and posted to our website the nearly 1-hour conversation between myself and the Congressman, I would recommend that you listen to the recording. It's an interesting commentary on the Trump administration's and Congress's priority policy initiatives. Also, I'm excited to share that U.S. Senator Bill Hagerty will be visiting Amaero on Tuesday, July the 1st. Senator Hagerty serves on the Senate Appropriations Committee and has been a strong advocate for Amaero. As we look forward to FY26, Amaero's leadership team will have 2 primary priorities. Number 1, scale production throughput, and number 2, sign new commercial contracts and long-term agreements. I'm confident that Amaero will differentiate itself in FY26. We will end the year with approximately $63 million of tangible assets and cash on our balance sheet. That is June 30th of the current fiscal year. During FY26, we will add approximately $35 million of additional tangible assets to our balance sheet, thus expecting to end FY26 with approximately $100 million of tangible assets and cash on our balance sheet. We are fully funded, and Amaero has a differentiated market position. Amaero's proven, established technology that can be immediately adopted. Amaero addresses critical vulnerabilities in the U.S. domestic supply chain, and Amaero has capacity to scale production throughput. As for commercial success, FY26 will be the year that we scale revenue. With the advent of Velo3D long-term agreements, coupled with a purchase order of 27 tons of titanium spherical powder, we have strong revenue visibility for FY26. As guided prior, we expect revenue growth to significantly accelerate in Q1 FY26. And with that, I'd be happy to take any questions, Jane.
Thank you, Hank, for that. Sorry, I've got a bit of thing in my throat. Please use the Q&A function if you do have questions for Hank. Let me just jump into them now. So just a question here on the second atomizer. So can you provide a progress update on the recently commissioned second atomizer and its near-term production goals?
Yes. So as a reminder to people, we have two production areas that we have completed. One production area, which houses the first atomizer we commissioned a year ago, will be dedicated to C103 and refractory alloys. An adjoining production area that is much larger has been built to have room for up to 5 atomizers dedicated to titanium production. Our current CapEx plans include 3 atomizers dedicated titanium. But again, we have room to the extent we have the long-term demand to expand to 5. The first of those atomizers dedicated titanium, the second overall, we just commissioned, we announced this week. We are starting July 1, full production with 1 shift. So we will have 2 atomizers going full production on 1 shift of production. We would expect to add an additional shift, likely late the first quarter of the fiscal year, early the second quarter of the fiscal year. Right now, we've got, our current plan calls for slowly ramping up production over the calendar year. One of the decisions that we've made strategically, Jane, is we're investing forward for where we expect the demand signal to be a couple of years from now. And as a result of that, we will always have about a 50% of our capacity utilization unused, right? And thus be in an enviable position to accelerate ramping that production if the demand calls for it. We talk a lot about the defense industrial base. One of the really interesting opportunities in the U.S. right now that really the catalyst was Trump's shift in tariff policy. But more broadly, what you're really seeing now is a focus of companies to realign their manufacturing footprint better with their end market. So by way of example, if you go look at Stryker's most recent earnings call, both the chairman, CEO, and the CFO made a point of saying the number one strategic priority of Stryker is to better align their manufacturing footprint with their end market. What are they saying? 75% of knees and hips, right, orthopedics, are sold in the U.S. However, 100% of the manufacturing of those orthopedics occurs in Ireland, and 100% of the supply chain is in Europe and Canada. They estimate a $200 million tariff hit for the back half of this calendar year on an annualized basis, $400 million. And we're seeing a lot of examples of this. We all read in the press about Apple, by way of example, but a lot of industrial companies scrambling with a sense of urgency to relocate manufacturing and the supply chain back to the U.S. to better represent their end market. So big opportunity. And part of the reason we're staying in front of this from a capacity standpoint, given the opportunity, we will further accelerate our production.
Thank you, Hank. This question is actually just in regards to the announcement on Monday. So can you provide some more detail on the counterparty behind the 27-ton titanium spherical powder? And what is the expectation for ongoing orders from this party?
Great. So as a general practice, where we have long-term agreements, we will provide details in accordance with those agreements. We'll identify the counterparties and so forth. In this case, this is a purchase order as opposed to a long-term agreement. We have not announced the counterparty. We don't plan to announce the counterparty so long as it is simply a purchase order. I will tell you that the purchase order right now is for 6 months from July to December. The party has indicated a preference to extend that for 12 months, which we've indicated and given them the right to do, and I expect that we will. And moreover, they've indicated a desire to enter into a long-term agreement. What we're trying to balance is signing long-term agreements where we have highly strategic counterparties, coupled with short-term demand that enable us to scale our production. This particular counterparty has got another proprietary patented capability that could be complementary to our business. And so we'll continue to engage in them beyond simply the powder sales. But for now, we have no plans to announce the counterparty. Again, if this develops into a longer term purchase order and/or a long-term agreement, we certainly would. And by the way, clarifying, and I've heard some comments that perhaps it wasn't clear. So just in the spirit of trying to provide clarification, we announced, as you know, Jane, maybe 6 or 8 weeks ago, that we expected to have 1 or 2 commercial announcements before the end of the quarter, being June 30th. We have essentially made those now, in case that wasn't obvious. So the first of those 2 was the Velo 3D long-term agreement that was announced. Very, very consequential in my mind. Velo 3D is the only made in USA metal 3D printing equipment OEM, hardware manufactured in the US, software written in the US, data stored by a US company, and they've never sold equipment into China. So given our relationship with the DoD and the US government, it is viewed very favorably that we're supporting this counterparty and that we've developed a collaboration. We will have what I would say are significant sales in the first and second quarter of this year for C103 and refractory to that party. And then the second of those commercial announcements we had alluded to was this 27-ton purchase order. So I would not expect that we would have any other commercial announcements between now and June 30th.
Hank, there's quite a few questions just coming through on tariffs. So can you give us an update on the impacts of those proposed tariffs? And are you seeing increased inbound interest and opportunities from customers looking to secure that US supply?
So let me take 2 parts of that. The tariff side that could adversely affect us from a supply chain, and the tariff side as far as generating and creating demand, right, of this manufacturing coming back to the US. On the starting side, some of our bar, for example, titanium bar, we have 2 supplier relationships. We have a mill in China that we have a relationship with, and we have a long-term supply agreement, as you might recall, with Perryman, one of the premier titanium manufacturers in the US. So we have both China supply and we have US supply. The fact of the matter is today, even with a 60% tariff, which is the current tariff for titanium that we import from China, even after that tariff, the cost of our Chinese bar, okay, is much lower than our US bar. Our US bar is 50% more expensive than our titanium bar, even with a 60% tariff. Now, we have certain applications that require what's called DFAR material or US allied source material, particularly defense applications, of which we are using US source bar. We have other applications that are more price sensitive, of which we are using Chinese bar. So yes, there we are paying a tariff on the Chinese. Even there, it is less expensive. On the demand signal side, it's hard to overemphasize the very significant impact it has had on inbound interest. And I would say in the near term, the interest is fantastic. It will likely lead us to accelerate our production plan over time. And then there are certain opportunities that would be transformative in nature. I think the nature of those always are that I would give it, you never give it too high of a probability until you get much higher down the road on these very, very, very large opportunities. But these are multinational companies that are looking to realign their manufacturing footprint with their end demand. And there are dozens of those type of opportunities.
Thank you, Hank. Bear with me. There's quite a few coming through, jumping around. So what role do long-term agreements with Carsion, CAM, Adman, and Velo 3D play in providing revenue stability and scalability?
Yeah, it is a fantastic question. And it's exactly the way that I think about it. I think long term, if you think about our revenue mix, what I would expect is about 80% of our revenues will come from long-term agreements, and about 50% of revenues from DoD or the US government, and about 50% of revenues from commercial, right? Non-DoD, non-US government. That will give us a higher multiple on evaluation as an A&D company, and yet diversify that risk in the event you get into an appropriation issue, a budget issue, a change of administration, whatever else might be the case. On long-term agreements, what we want with long-term agreements is not just revenue, not just purchase orders, but we want to align with highly strategic partners. And we'll look at this kind of vertical by vertical. In the case of Castron, we align with the unequivocal technical expert for printing C103 and refractory, and Dr. Yuping Gao. That is a great offensive move, and that is a great defensive move, kind of blocking others, if you will. Likewise, Velo 3D. right? The fact that they are the only U.S. equipment OEM, it's a great offensive move. And by the way, they also went through a restructuring last year. They're going through significant new investment right now, really on the uptick. So a very interesting time to engage with them as well. Dr. Arun Jeldi, the CEO, I've got to know quite well. So those are examples of highly strategic. I would expect this time next year that we would have another 3 or 4 of those type of long-term agreements in place. Such when we sit here this time next year, I would also be able to say, I've got 80% revenue visibility through the first and second quarter of fiscal year 27. And what I think you're going to see is our revenue expectations are internally kind of in line with consensus. We've not given guidance, but I would say it's in line with consensus. That is a very significant increase, right, from what our revenue has been. Again, I say with confidence, this year will be the year that we scale revenue. I would then expect 100% year-over-year growth into 27, 100% year-over-year growth from 27 into 28, given the demand and the nature of the market that we're satisfying.
Hank, there's quite a few questions here coming just through on qualification and whether or not we've obtained the T64 qualification. Perhaps you want to just make some comments on that?
Yeah, and so there's lots of different areas on this, and we think about from a strategy standpoint, again, almost like the question about long-term agreements, think about a portfolio. There will be certain opportunities that have very, very long qualifications. So probably the longest qualification would be to be in a rotor part aerospace. It could be 2 or 3 years to get qualified with Boeing, right? In that type of application. You've got other applications such as printing suppressors, which is a great AM application and very timely given change of the legislation in the US. We can qualify with a printer in a matter of weeks, right? For that type of application, printing suppressors. And then you've got other opportunities that fall in the middle. A medical application might be for an existing part where you're updating a material, it could be 6 to 12 months, right? And we are approaching that along the way. We're, at different parts of qualifying with different companies on different applications. If you look at where we are for FY26 revenue, I do not see any qualification impediments. That is, I'm highly confident we can achieve FY26 revenue and the goals that we have with our current qualifications and current qualification strategy.
Okay, moving on. So how is Amaero engaging with US and allied governments to strengthen its role in securing domestic and NATO-aligned supply chains?
So we have not done much at all as it relates to NATO alliance supply chains. As everyone is probably well aware, we're seeing a big uptick in spending in Europe. So we are receiving some inbound inquiries. I would say they're very early and premature. On something such as the titanium side, that would be a pretty low bar. And I would expect that we'd have applications in missile scramjet engines, things such as that. On more advanced applications such as hypersonics, I think that is going to be a US only opportunity for the foreseeable future. I think given export controls and other things, hypersonic strategic missiles, where you might see a use of C-103 and refractory is in the space complex in Europe. So whether it is on satellites or whether it is space launch, but specific to NATO, I would not say that we're highly engaged at this point. The one exception to that is, there's a lot of press on AUKUS, right? And both on the AUKUS itself, as far as acquiring the capability, but also the industrial collaboration. I'm a realist, and so I look at what am I really seeing on the ground? What's really happening? I can't say that I'm seeing anything of consequence relating to AUKUS from an industrial opportunity standpoint. And I wish I was more positive. And we will not explore or pursue an AUKUS opportunity unless there's a contract in hand. We've got too many other opportunities. We just don't have the resources to do that. What I think we will end up doing is with a US contractor that has a contract in hand for AUKUS. That would likely be what would take us back to participate in an AUKUS type. As you know, Jane, we're very active with the US Navy, the naval nuclear side and the US non-nuclear side. We've got significant members of the US Navy through our facility, probably 3 weeks out of 4. And I would expect announcements over this fiscal year that will be consequential relating to the maritime and the submarine industrial base. But in the near term, I would see that being more US Navy focused and US Navy centric.
That answers a few of the questions that were in there as well, actually. So Moving on with increasing production capacity, what gross margin profile do you expect across key product lines like titanium and refractory powders?
Yeah, it's a great question. So if you on a long term, so think FY30, right? You stabilize the business. On a long-term basis, this is a good business from an operating margin standpoint, and it's a specialty business. So think about this as a 23-24% EBITDA margin business. All right. Good long-term operating margins. If you then take the powder side of the business and the PM HIP side of the business, the highest gross margins are going to be C103 and PM HIP. The lowest gross margin, albeit still attractive, is going to be titanium. So think of titanium. If you've got a SG&A of 12% and you've got EBITDA margin of 24, so you're at a 36% contribution margin. Okay, overall, think of titanium as being 32, and think of C103 and PM HIP being north of 40, right, on a contribution margin. Obviously, gross margin would be higher than that, right? But C103 and PM HIP would be the most attractive parts of the business from a gross margin standpoint. Again, titanium attractive, about a 20% EBITDA margin or about a 32% contribution margin. That probably takes you to around a 42% gross margin. So still very attractive and much more attractive than the commodity metals such as stainless steels or nickels, but not as attractive as a very high value refractories.
Thank you, Hank. Okay, do we anticipate expanding outside of Tennessee or pursuing partnerships to bring your PM HIP or additive manufacturing technologies closer to the end user?
Wow, these are great questions. They've been sitting in some of our meetings. So Matt Sermon, who is the program executive officer for the submarine industrial base, maritime industrial base in the U.S., one of his very favorite charts he uses in a presentation is he's got a map of the continental United States, and you show this zigzag line that makes about 50 turns. And his point of it is, this is my average part. My average part takes over 2 years to manufacture, but of those 2 years, it's waiting in queue for 18 months. Right? That is, we move this part all over the country for various processing. It gets in queue. It only is actually being worked on maybe 6 months of the 24. And so part of the conversations that we're having with the submarine and maritime industrial base, as well as some other larger commercial opportunities, is do you co-locate some of these capabilities? And it is more likely, given that we've got a very favorable cost of electricity, right, in Tennessee. We've got a very favorable workforce, cost of the workforce, et cetera. It's more likely they would come to us than we would go to them. But we are looking at, and we're in a 312-acre industrial park that's got 10 extra parcels that are available for development, right? And what would have taken me, by way of example, 3 years to build in Melbourne, I built here in 12 months, right? What would have taken me in Melbourne 2.5 years to get a transformer, I got here in 10 months, right? And so the speed of which I can do business in a place like Tennessee, not to mention Australia, but even a place like Massachusetts or California or New York, right, is much quicker. So I think it's a great point. And co-locating, keep in mind, Jane, that where we've tried to differentiate ourselves is we now have the largest capacity of production, but very important, and the lowest cost production. So we've got competitors for titanium at $140 a kg, they lose money. If I wanted to, I could price titanium well below that and make money. And we'll continue to invest in initiatives that will bring down that cost further. And we've got a roadmap of what some of those initiatives are.
Thank you, Hank. I'm jumping around again. So how does the committee approval for the Defence Appropriations Bill impact expected contracts or revenue for FY26? And then secondly, what are the chances of the House of Senate approving?
So let me clarify the question in case it's not clear. And certainly if I was following Australian politics, I wouldn't be clear, right? So it's hard to expect that, given all the nuances of our process, people in Australia are fully versed on this. FY25, we've got a fiscal year, US government starts October 1 of each year. So we're currently in FY25, it ends the end of September. Back in March, we passed a continuing resolution through the end of FY25. By the way, DoD, Department of Defense, has never in its history operated an entire fiscal year under continuing resolution. Right? This was highly unusual, if you will. Because you're under continuing resolution, you adopt baseline spending from the prior year. So what you're seeing right now in the continuing resolution, which is the first bill that is being considered, that the House has now passed. The Senate, I believe, they hope to get the entire bill done by July 4th. I think it's highly unlikely. I think with some luck, you get it out of the Senate in the first half of July. It will have to be passed before our debt ceiling expires, right? Which should be early to mid-August. That includes an additional $150 billion for defense add-on to current FY25. And then it's basically a tax bill beyond that. So what we call the reconciliation bill is that FY25 bill. FY26, the markup just came out of the House. And I would not have said it publicly. I'll let people go listen to the interview that we had with Congressman Fleischman. He comments on Amaero and he comments on our support, but I'll let others hear his words rather than me say that myself. Congressman Fleischman is on the Appropriation Committee. Senator Haggerty, who will be here on the 1st, is on the Senate Appropriation Committee. And I would expect that Amaero would receive strong support in the FY26 budget, given how highly we align with the administration's policy. It is expected that the FY26 will be the first $1 trillion DoD budget, right? So about a 12% increase. They're cutting certain areas. Remember all these DOGE measures. The areas that they're increasing are there's 5 areas they're increasing: hypersonics, missile defense, submarine industrial base, AI, and unmanned. The first 3 of those directly align with our initiatives, right? Hypersonics, missile defense, and submarine industrial base. So I think we continue to be highly aligned with this administration's strategic policies.
That answers the next question that was actually there as well. So, with the strategic, this one's come through a few times actually. So what is the strategic interest in Amaero, like in the USA, with the defense sector attracting investor interest? And are financial sponsors or trade buyers making inquiries?
So I would never comment on inquiries or conversations we may be having. But what I would say is, to the extent you follow the financial press, it's very well reported that the defense industrial base and the manufacturing supply chain ecosystem are amongst the most sought after investment themes for private equity investors in the US. Unlike Australia, the US has a very, very large private equity sector, right? And if you look at a company like Amaero and you say, how do we monetize this investment? And obviously, I don't monetize this investment by selling on the open market. We'll monetize this investment as I have investments in the past, and that will engineer a capital market transaction. That could be a private equity firm taking us private. That could be relisting in the US. It could be a merger. It could be an acquisition. There's any number of ways that would happen. I would say that we are highly desirable, right, given our sector. Now, candidly, I don't think that we will be in a position that it will make it interesting to consider overtures until we are solidly profitable. And because I want to get credit, if you will, for that forward growth. So, typically you will you'll get paid a year forward. As we go into FY28, we will establish, we'll be profitable before that, but we'll establish strong margin structure at that point in time. So, I think we're still a couple years away from seriously engaging in those type of conversations. But it is a very popular theme, and Amaero is quite visible in the unique and strategic nature we hold. So it probably one could conclude there has been interest expressed.
Hank, this one's just on looking forward a little bit. So what are Amaero's top strategic priorities heading into FY 2026 beyond ramping up production? Are there new markets or technologies in focus?
So I would say that the leadership's primary 2 priorities for fiscal year 26 is we now will embark upon scaling production. So up to this point, we've been operating 1 shift on 1 atomizer. As of July 1, we'll be operating all out, full production of 1 shift on 2 atomizers. We'll then be adding a second shift later in the quarter, or probably more like the second quarter of the fiscal year. Because we've invested forward in our capacity, right? And we've done this very intentionally. We're establishing capacity a couple years ahead of where the demand signal is. At any given time, we'll be operating at maybe 50% capacity utilization. And the benefit that gives me when I'm having these large strategic conversations right now is no one, and I underscore no one else, US domestic production, has capacity to scale at the pace that we do to meet the demand of some of these larger customers. So number one, scale that production. Number two, begin to anticipate and stand up our equipment that we could scale much more rapidly to meet that demand signal. And then that goes to the second initiative, which is going to be new long-term agreements, new commercial contracts. I've said in prior calls, given our pipeline, I would expect between now and the end of the calendar year, one plus announcements each quarter. So maybe 2 or 3 announcements between now and the end of the calendar year. I would expect between now and this time next year, another 4 or 5 of those announcements we would make. So we'd have good visibility at that point going into FY27.
Hank, I think that might be all the questions answered there. If we've missed any of your questions, please feel free to reach out via the contact details, which can be found on the bottom of our ASX releases. Hank, I'm not sure if you've got any final comments.
No, as always, thank you very much for the trust and confidence. And Jane, thank you for moderating this.
Not a problem. Thank you, everyone.